Hi, everybody. This is Gary doing Sentiment Timing, and this is our free weekly video report for Wednesday, April 5th, 2017. So, pretty wild day today, and I have a lot to go over. So, let's get started. Previously, I've been saying that Woody has been calling for a very, very choppy 2017. And we're going to get a few of these kill zones, these big moves to the downside. And what we really try to do is just paint a picture for our members as far as what to expect. And the way we do that is by just taking advantage of the market opportunities. And the human beings in the markets are going to be irrational, and there's always going to be an irrational element at work, and that's what creates the market opportunities. So that's what we look for, and we do that through the through Woody's technical timing indicators, which predicts when these markets are going to reverse. Then we match that up with sentiment, and because most likely what happens is these reversals are all going to come at some type of sentiment extreme, whether it be extreme bullish sentiment or extreme bearish sentiment. Those are usually going to lead the reversal, and then from there we just use our regular technicals to try to pinpoint when and where these reversals are going to take place. So just to give you an idea, this is going back to November 17th. 2016, and what Woody was saying is that, look for a spike to new highs, maybe 2300, 2350, and that there's going to be a good decline that's going to take place in 2017. So from November, we should have known that the market was going to be going up into 2017. So that was just say the bigger picture there. Now, when we get into December, we start it. Woody started say narrowing down the time period, and what he was looking for was it to come sometime in February. So again, this is 2 months ahead of time on when it is, but we were still, what he was looking for was a specific topping pattern that he identifies. So from there, let's just go to the March 2nd report. And what he was saying was that we had a 99% bullish day, and that was on March 1st. Those are they're a day behind. But what happens was that was looking for the extreme bullish sentiment, and from there, the micro kill zone is going to occur in March. So we went from uh, November 2017 to December to March, where now we're starting to narrow in on when this kill zone was starting, and the 99% bullish day was the top. And if we take a look, remember, everybody buys. They never think the market's going to go down when we have this euphoria, so everybody is buying. But institutions, they're shorting up here, and they're waiting for the panic to start buying. And if you notice on March 1st here, that was the 99% bullish sentiment, and that was the top for this entire rally. And the kill zone, it was a micro kill zone, so it wasn't as powerful as say we would have liked, but it was still the largest decline that the S&P saw since the Trump rally started. So let's go to our current report here. And what he was saying is the 99% bullish was the top. And then what happens if you notice on that big drop here, we got a 3% bullish reading. So remember, we have people, the institutions, they short at euphoria and they start buying at capitulation, and the 3% was the low. Now, what he was expecting, what the profile was looking for was that we were going to get a recovery into month end. So this was as we were making this 3% bullish bearish sentiment reading here. that we are looking for a rally going into the next week, and that's pretty much what we got last week. Now we are looking for when the top is going to be coming in, because there's going to be another decline that's going to be hitting, and we already know the dates to be looking for it, and it may have already begun. And that's pretty much what he had said on it, is that it's within the time frame. So we know that there's a top coming if it didn't already come, and it should decline into our next low turn date, and most likely we're going to see more extreme bearish sentiment readings. So that is, what we do as far as looking for, when to expect it turns, and how to say see how the say traders are feeling about it, and if they're all bullish and they think the market's going up, then most likely it's going down. And when everybody thinks the market's going to continue down, that's when the lows are made. So we had our time period on that, and this is today. This is the morning notes that I put out to the members, and I had said that the S&P 500 futures was bouncing just around three minus three to even all night. Then we had a massive buy program, and I had said that it's all great, but the pattern that formed, it will all be for nothing, and it's a bearish wedge, and it has a target of 23.45. So this is the wedge that I was talking about when we were right around here, and I had said that the target was 23.45. I didn't know it was actually going to happen today, because this pattern sometimes takes a few days, but we knew that we had a top that was coming. We had a bearish sentiment, I mean a bearish pattern with a target. So this gap right here was a great opportunity to either add to your short position or build one, because you knew that the next larger move is going to be to the downside. So this is just a color coded thing that I do, and we were overbought on the daily 60-minute, and neutral on the 15-minute, but it was heading down. But this was the big piece where we had bearish divergences on all time frames. Not only that, on the close of on April 4th, you can see institutions were selling the S&P 500. So here you can see the block trades, the total money flow. They were selling this. Today with the gap up, guess what? They were selling again. So it was a great shorting opportunity because of the pattern, because of the time period to expect the actual top to hit, and as well as looking at institutions that were selling. So that's one of the things that I do with the with my Markets Path site, and I'm giving everybody a free subscription to that subscribes to the sentiment timing. So if you do that, you'll be getting those morning notes and the video reports. So let's just take a quick look at the regular charts. The pattern that I like and I think is going to be playing out is that excuse me, that we made an ABC of an A. Right now, we made an ABC of a B, and now we're going to be starting this wave C, and most likely that bottom's going to come right when the low period is supposed to be hitting with Woody's technical turn date, and most likely all we have to do is look and see how sentiment is. As if everybody is bearish on the market and we're coming down to specific targets, say 2300, 2280, 2250, we have to see, because we know the time period, we just don't know where the price is going to be. And as long as sentiment's in it, then it's going to be a great buying opportunity, because once once the low comes in and everybody is extremely bearish, you get these snapback rallies. So you can trade both ways on this, and that's really the best part about this, is that you know when to be shorting, and you also know when to be buying or covering your shorts. And things have been going as planned, and this volatility is here to stay. And that's one thing that Woody's been saying for the last 6 months, is 2017 is going to be a very volatile year. And so far it's been that way. So hopefully this helps you with your trades. Good luck, and I will talk to you guys next week.